Canada is building more housing, but here is the problem. A growing share of that housing is not being built for Canadians to buy, it's being built for Canadians to rent. Between January and April of 2026, approximately 58% of all new housing starts were intended for rental market, and this is all across Canada. At the same time, construction on condos and other homes intended for ownership have fallen to levels not seen since 2009 recession. So Canada has not stopped building homes. We may simply be building more homes people can live in, but fewer homes they can actually own. And that shift could have a major impact on renters, buyers, homeowners, and the future of real estate in Canada. My goal here is not to convince you to buy or sell, it is to explain what is actually happening beneath the headlines so you can make a better decision based on facts, not fear. Because the number of homes Canada is building matters, but the type of home we are building may matter even more. Now let's start with the headline numbers. According to CMHC, Canada's annualized rate of housing starts was approximately 239,000 units in January of 2026. More than 375,000 homes were already under construction. On the surface, that does not look like a housing construction crisis. But there is an important detail. A rental apartment counts as a housing unit. A condo someone can purchase also counts as a housing unit. So does a townhouse or a detached home. They all provide shelter, which is important, but they do not provide the same financial opportunity for people living inside it. Renters get a place to live, flexibility, and fewer maintenance responsibilities. A homeowner also gets a place to live, but part of each mortgage payment may gradually build equity. Ownership is not always the right choice. There are mortgage costs, taxes, maintenance expenses, and market risks, like we are seeing right now. People who bought in 2021, 2022, right up to 2024 are losing money. But there is still a major difference between paying for housing and gradually owning the home while you pay for it. And that is why the total number of housing starts does not tell the full story. More rentals, fewer ownership homes. BMO has identified a major shift in what Canada is building. Between January and April of 2026, approximately 64,600 homes were started. About 58.2% were intended for rental market. At the same time, construction in condos and other homes intended for ownership across Canada's major cities fell to its lowest level since the 2009 recession. Rental construction, meanwhile, has remained near record levels. More than 180,000 rental units are currently under construction across Canada. For the first time, rental unit under construction reportedly exceeded the combined number of condos and other home ownership options being built. That is not a small change. It is a structural shift in the housing market. And the main reason comes down to how projects are financed. Most condo projects cannot begin construction simply because they have the city approval. Developers usually need to sell a large portion of that building before a lender will release construction financing. Those advanced sales are called pre-sales. In some projects, developers may need pre-sales of roughly 60 to 70% of the building before construction can move forward. But pre-sales have slowed sharply. Buyers are looking at today's pricing, mortgage rates, resale inventory, and deciding that some projects simply do not make financial sense. Investors are also more cautious. In the past, many investors were willing to accept negative monthly cash flow because they expected the property to increase in value before completing. That assumption is much harder to make today. Resale prices have softened in several markets. Rents have slowed or declined in some areas. Assignment sales have become more difficult, and buyers are no longer assuming that every pre-sale will automatically be worth more by the time it completes. When pre-sales do not happen, financing may not happen. And when financing does not happen, projects get delayed, redesigned, or cancelled. That means a building can have renderings, a small sales center, and city approval, and still never become an actual housing supply. Now let's talk about purpose built rental. Purpose built rental projects work differently. The developer or institutional owner normally plans to keep the building and collect rent over a longer period of time. They do not need to sell each unit to individual buyers before construction. Rental projects have also received significant government support, which the presale or home ownership section does not get. The Federal Apartment Construction Loan Program provides low cost financing for qualifying rental developments. The program has approximately 55 billion available and is expected to support more than 131,000 rental homes by 2031 or 2032. To be clear, supporting rental construction is not necessarily a bad thing. Canada needs more rental homes. Many cities have extremely low vacancy rates, limited tenant choices, and rapidly rising rents. More rental supply can create more competition between landlords and reduce pressure on renters. The issue is that rental construction is strong while ownership construction is becoming extremely weak. That disbalance is what I'm talking about. A balanced housing system needs both. It needs secure rental housing, but it also needs entry level condos, not micro units. I'm saying it very clearly, entry level condos, not micro units. It also needs family homes, detached, duplexes, row houses, all of them that ordinarily Canadians have a realistic chance of buying. There is another part to this story. Many rental projects completing today were planned several years ago. At that time, Canada was expecting a rapid population growth and severe rental shortages. But conditions have changed. Canada's population declined by approximately 55,000 people during the first quarter of 2026 and approximately 200,000 in 2025. At the same time, more than 180,000 rental units remain under construction. That does not mean every city will suddenly have too many rental homes. Real estate is localized. Conditions in Vancouver may be different from Calgary, Toronto, or Halifax. CMHC expects a rental market to move closer to balance as a new supply is completed and population growth slows. That could mean higher vacancy rates, more rental incentives, and slower rent growth. For tenants, that's a positive, but it creates an unusual situation. Canada may be completing a large wave of rental housing while the future pipeline of ownership housing is shrinking. In simple terms, we may be solving yesterday's rental shortage and creating tomorrow's ownership shortage. But this is not guaranteed, but it is a real risk. This is especially relevant in Vancouver and the lower mainland. Vancouver recorded approximately 2,844 apartment starts in 2025, which is slightly above its 10-year average. But apartment starts included both rental buildings and condominiums. Ground-oriented housing starts, including detached homes, semi-detached homes, and row houses, were approximately 5,341. That was below the 10-year average. CMHC has also warned that weak condo presales, rising unsold inventory, and tighter financing are threatening future ownership supply in Vancouver and also in Toronto. And this matters in Surrey, Langley, Coquitlam, Burnaby, and across the lower mainland. A project does not become a real housing supply because you see an advertisement or a presale center. The project still needs buyers, it still needs financing, and it still needs to begin construction. Housing construction also works with a long delay. The project that does not start today becomes the home that was not completed 3 to 4 years from now. You may not feel the shortage right now, as we are all talking about surplus inventory. There are still projects being completed from early pre-sale cycles, and the resale inventory remains elevated in several markets. And if a new ownership project stops entering the pipeline, the impact may become more visible later. Now, does this mean prices go up? Not necessarily and not immediately. A decline in ownership construction does not mean prices will increase next month or the next year. Prices will still be affected by mortgage rates, employment, income, consumer confidence, resale inventory, and a number of buyers who qualify for financing. The market can remain soft today while the future supply pipeline becomes weaker. However, if buyer demand returns in a few years and few ownership projects have been completed, the demand could become concentrated in the resale market. Now, when there is more demand and less supply, common sense says prices go up. And that could create competition for existing condos, townhomes, and detached homes. But this is the potential medium term risk. This is not a guaranteed prediction. The responsible conclusion is that ownership supply pipeline needs to be monitored carefully. Not that prices are automatically about to explode. For buyers, the message is not to panic and rush into the market. The message is to recognize that today's softer conditions may not last forever. My predictions basically are approximately around 2030 is when we will see a recovery in the condo market and we will start seeing prices going up. In the current market, buyers currently have more negotiating power in many parts of the lower mainland that they have not had during the peak of the market. Use that power carefully. Compare pre-sale pricing against resale pricing. Understand the deposit structure. Research the developer. That is very important. Calculate the payments using realistic mortgage rates. And buy a property that will work for you in the market that remains flat for several years. Do not buy solely because someone tells you that there will be a future shortage and there will be a price increase, and then you can upgrade from a condo to a townhouse or a townhouse to a detached home. Do not buy a home with that intention. The right decision depends on your finances, your timeline, and your specific property that you're looking to buy. For sellers, a possible future shortage is not an excuse to overprice your home today. In the short term, for condos, prices are expected to further go down. Your property is competing today against today's listings and recent sales. Buyers are looking closely at monthly payments and value. Pricing still needs to reflect current market conditions. For existing homeowners, weak future ownership supply could eventually support resale values. But there is also a big issue. If fewer ownership homes are built, younger Canadians may have fewer opportunities to buy in the future. Mover buyers may struggle to find family sized housing, and the gap between existing homeowners and long term renters may continue to grow. And we may be looking at a country called Canada as a renter's paradise and a owner's nightmare. A healthy housing market should not only protect people who already own properties, it should also create realistic pathways for new home buyers to enter the market. So, to wrap it up, Canada needs rental housing. There is nothing wrong with renting, and homeownership is not the right choice for everybody. But Canada also needs a realistic pathway from renting into ownership. And that, I feel, right now is under jeopardy with all the policy changes and the construction that is happening. Right now, the headline numbers suggest that we are building a healthy amount of housing. But beneath those numbers, rental construction is carrying the market while ownership construction is weakening. And that is the real story. Canada has not stopped building homes. We may be simply building more homes that Canadians can rent and fewer homes that they can eventually own. And in the long run, the most important question may not be how many homes did Canada build? The more important question may be who will have the opportunity to own them? If you're trying to understand what this shift could mean for you and your decision in Surrey, Langley, or anywhere in the lower mainland, there's a link in my description below to reach out to me. Until the next video, have a good day.